Are you wondering what we're in for in the housing market in 2023? This is sorry, here, come here, Penny. It's okay, please. Okay, this is our new baby. We just adopted her. We found her outside of my husband's school. But okay, this is Penny. Is the housing market going to crash in the last part of 2023? If you're reading the headlines, if you're watching the news, if you're clicking on some YouTube channels, then you probably might be convinced that the housing market is going to crash. And if you want to see something funny, watch all the way till the end. We got a new puppy and I tried to do my introduction with her and it was just too distracting. But if you want to see our new little girl, watch until the end and I'll have the editors where I was trying to do the market update. But in this video, what I'm going to cover with you guys, and this will pertain to you, even if you're not going to move to Tulsa, Oklahoma, I would still tell you to watch at least the first part of the video where I'm going over the national market, because it really is out there that we are going to be in some kind of foreclosure crisis, just like we were at 2008 because of the economy. So I'm going to go through data with you to give you a broad perspective so you can put into context the headlines and understand that data articles can be manipulated to do almost anything. It's crazy, what you can do with numbers. But when you put them in context, at least it will make you make decisions based on, being educated about the market and not misinformed, or making decisions out of fear. And if this is your first time to our channel and you want to know everything that there is to know about living in Tulsa, Oklahoma, or our surrounding suburbs, then tap that little bell notification and subscribe. That way you can be the first to know what's going on in our local Tulsa area real estate market. I'm Sabrina Shaw and I am a local real estate agent here in Tulsa, Oklahoma. And my team and I get calls every single day from people just like you who need help making that move to Tulsa. And let me tell you, we absolutely love it. So whether you're moving in 9 days or 90 days, give us a call, shoot us a text, send us an email, jump on a Zoom call, and we would love to help you make that seamless move to Tulsa, Oklahoma. Okay, so first, one of the reasons that people are projecting, massive foreclosures in 2023 is because they're worried about a recession. And then they're worried about the unemployment situation, thinking that if we have a recession, we're going to lose jobs. And if people lose their jobs, they're not going to be able to pay their mortgage, which is very valid. Let's look at this. So unemployment rates are at an all-time low. So if you look at this today, unemployment rates are at 3.5%. Through a 75-year span, unemployment averaged 5.7%. So you got to think, over 75 years with that average, we only had the housing crisis from 2008 till 2012. And when we look at that right here, the average unemployment rate was 8.3%. So even if, and honestly, you've got some economists that are saying, that we won't see a recession. A lot of experts predicted that we were going to see a recession earlier in the year. Typically, when we see a recession, interest rates go down. A lot of people in the industry were like, okay, well, if we do have a recession, we'll get a break on interest rates, because when you look at it graphed historically, every time there's a recession, then interest rates go down. But now we have experts that aren't even sure that we're going to have a recession. So we really don't know. So as far as our economy goes, that is unclear. But again, we are at a historical low, 3.5% unemployment rate. And I'm not an economist, I'm not a lawyer, I'm not a financial advisor. So this is, just strictly my opinion based on experts and data, but look up your own stuff. I can't give you legal advice. I'm just putting this information out here. So even if it went up to, 5-6%, which no one is projecting that, that's still around the 75-year average, where we didn't see a huge, where we're not seeing a wave of foreclosures due to that. 2008, 2012 was its own little animal. And yes, it caused unemployment to go up. But, that recession was due to housing. That recession was poor lending practices. That recession was people having negative equity. And we'll go into that. So I want to talk about mortgage debt, because you've got to think, this is another headline. The headlines are going to be something like, mortgage debt is at an all-time high. Okay. Houses are more expensive. That is true. But are we looking at the mortgage debt, or are we looking at that monthly payment? And so when we look at that monthly payment, that is low. Now, it was at an all-time low in January of 2021 because houses hadn't appreciated as much and interest rates were lower. So this is mortgage debt service payments as a percent of disposable personal income. This shows you that percentage of disposable personal income throughout the years. So in January of 1980, it was 4.4. April 1992, 6.9%. October 2007, that's where it got really high. It was at 7.2%. And then in January, 3.5%. And today we're at 3.9%. So historically, that mortgage income ratio is still near all-time lows. It's not an all-time low, but it's still near all-time lows. So you have to put that in perspective to think about, it's about the payment. It's about, what you can afford. And people that have bought and have gained all that equity have some amazing affordability. Another thing that I hear, and I've talked about this, I don't hear it as much now. A lot of people talk about all those people that went into forbearance, they're coming out of forbearance, and what's that going to do? That they're all going to go into foreclosures. Well, let's look at this. This is the share of mortgage loans that in forbearance, and it has been decreasing and decreasing and decreasing. So in June, the share of the mortgage loans in forbearance decreased to 0.44% in June. Now, it's all-time high in May 2020, 8.4%, okay? So we went from 8.4% of people with mortgages all the way down to now 0.44, so not even 0.5%. So let's just dig down a little bit more. This is a quote by Vice President of Industry Analysis with the MBA, Marina Walsh. It says, mortgage forbearance has declined because most homeowners have maintained or improved their financial health. Forbearance remains a viable loss mitigation option for homeowners who may struggle under more challenging economic conditions. So you've got to remember, when people were going in forbearance, what happened? We had no idea what was going on, but people's mortgages were paused and the United States government was giving people money. So people actually, a lot of people made it out better, and then they were able to recover. And, we knew that things were going to go on and be okay. And people are in a lot better, financial state than they were. Now look at this, and I don't want to confuse you, but it's important. So loans upon exiting the forbearance program. Okay, let's look at this green. Now, there's 3 different things here, but 35.3% were paid in full. Okay, so 35.3% were paid in full. They're out of the forbearance. 45.6% they were workout or repayment plans. So you had loan deferral and you had loan modification. Now then there were 17.9% that were still in trouble. Okay, they didn't have a loss mitigation plan. Does that mean they went to foreclosure? No. I mean, they could have paid things off. They could, they could have sold, paid things off. There was all that equity. Only 1.2% of people lost their home to short sales with deeds in lieu of foreclosure. That's too many. We don't want anybody to have to lose their house to foreclosure, but that's where we're really at. Okay, and this is exits from June 1st, 2020 through June 30th, 2023. All right, now let's talk about foreclosures. All right, foreclosures. So this is a perfect example of a headline being taken way out of context. When ATTOM put out their last foreclosure report, they said that foreclosures went up 187%. Is that accurate? Well, based on the numbers, yes. But what did they do? They compared numbers from 2021 to 2023. They didn't look at 2022 because that wouldn't have been 187%. They looked at 2023. Okay, well, what happened in 2021? There was the moratorium. I mean, you basically couldn't foreclose on somebody, so that is, yes, that's accurate data. Foreclosure filings did increase by 187%, but that's not a very good depiction because no one basically was getting foreclosed upon. Let's go back to 2008, 2009. These are foreclosure filings. 1.3 million, 1.5 million, 1.7 million. This is the housing crash. This is the housing crisis. Okay, 2011, 1.2. Going all the way back, it starts normalizing, 2014 to 2019, 614 to 296,000. Okay, 2019 was pre-pandemic. It was still a seller's market. We were seeing multiple offers. There were investors that were trying to get good deals, and it was hard, not impossible, but it was hard to get a steal on a house. And really, you might get a good deal, but getting a steal is a lot harder. Or, getting a steal like they did back during these days, just wasn't happening anymore. So are we going to see foreclosures increasing? Yes, we are. Okay. But you've got to remember a normal market because, between 2015, 2019, we had between 600 to 300,000 foreclosures. Too many. I'm saying this looking at a graph, not not trying to empathize with people that are going through that. There's horrible reasons why, that happens to people. This happened because people were on adjustable rate mortgage plans that they didn't understand that they were not healthy for. People were entering the market to cash out and make instant money. That's not what happened this time. People were buying to buy a house. They weren't buying to, flip and get rich quick. They're buying to live because home became so much more important. So yes, are foreclosures going to go up? Yes, we will see foreclosures go up. And I'll show you another graph in a second to put, more things into context. But, if you've bought within the past year and you can't hold on to your house and you have to sell, you could be in, a negative equity situation. There are some people that are going to experience that. With interest rates higher, affordability has changed. But lenders are still basically you have to give them your firstborn child to get a mortgage. You're in mortgage jail. It's not just easy to get a loan. Lenders are trying to protect their assets and want to make sure that the people are very well qualified and things like that. So yes, we will see foreclosures increase, but remember also that we are in a housing shortage. So we can absorb that inventory. We need the inventory. Okay, so just it's been low, low, low. But let me show you another thing because, we're just getting out of the forbearance. So yes, foreclosures have been low. Even before they were low, 2019. You got to think people in 2020, 2021, 2022 had fantastic mortgage rates. Their affordability is pretty darn good. And the people that wrote that gave the report and put that headline, again, they need people to click. I do it too. My editors do it too when, they're doing the thumbnail. But Rob Barber, the CEO at ATTOM, he said, the slight decline in foreclosure filings we're seeing is yet another sign of a rebounding housing market. With home prices back up, several factors have combined to put more financial resources in the hands of homeowners, providing more options to avoid foreclosure. Okay, now this is Bill McBride of Calculated Risk. And in November of 2008, he predicted the crash. And this is what he said in November of 2008. He said, foreclosure activity is already at record levels, yet as prices fall, foreclosure activity will probably continue to increase. The activity will be literally off the chart. That was his prediction in 2008. July 2023, here's what he said. There will not be a foreclosure crisis at this time. All right, let's look at delinquency rates. Serious delinquencies on a decline. So this is for mortgage loans that are 3 months or more past due or in the process of a foreclosure. Now look at this. In January of 2022, and it's the percent of mortgage loans, okay? So we're almost at 1.2% in serious delinquency by Fannie Mae, 1% for Freddie Mac. Look how that has gone down in June of 2023. So we are at between 0.5 and 0.6%. There are less delinquencies going on right now. Okay, people are paying their mortgage. And when I think about it, here is my thought process. Have you looked at what it would cost to go out and rent something? Have you looked at what it would cost to, buy a smaller house? You're probably in about the same situation that you are now if you took out a mortgage or refinanced, in 2020, 2021, 2022. So that your affordability is off the chart. A lot of people have a house that meets their needs and their payment is very doable and affordable. So look at that, delinquencies are going down. So, are people going to let their house go and then have to go and rent somewhere that they can't even afford? Move somebody in with you, move a family member in. I'm not just saying that flippantly, like it's easy, but people will, to keep that affordability, because that is like a once in a lifetime thing. In my opinion, I don't think that we'll ever see them that low again, to hold on to an asset that is going to help secure your future. Okay, so I just told you that. Serious delinquencies, those 90 plus days past due, dropped to the lowest. Oh, I didn't tell you this. They dropped to the lowest they've been since 2006. So the delinquencies haven't even been that low since 2006. The national delinquency rate remains 1.15% below its 2000 to 2005 pre-Great Financial Crisis seasonal average. So it is low, and it fell to its lowest level since the adjusted mortgage delinquency rate fell to its lowest level since the survey began in 1979. Because there's a resilient job market, and homeowners are continuing to make their mortgage payment because it's affordable. Okay, now let's talk about negative equity. Here's another reason when you look at this. 38.7% of people own their homes free and clear. No mortgage, cannot default, okay, because there's no mortgage. 30% of people have homes with 50% equity. Okay, so if you have a $400,000 house, then 30% of people have about $200,000 in equity. So if they fall behind on their mortgage payments, you think they're gonna let it go to foreclosure? They're gonna sell their house, take that money, and figure it out. I mean, you have all that equity, you're not just gonna let it go to the banks. Mortgaged homes with 1 to 49% equity, almost 30% too, 29.2%. We have built great equity over the years. Now, homes with negative equity, 2.1. All right, this is something for people. And I was just talking to one of my real estate friends out of Utah, and she was saying, you know, where she agrees with me on when I talk about the foreclosure crisis is like happening. She was saying, you know, what she's seeing is with some military families, you know, that have maybe bought in the past year and that are having to move, you know, that they're in a bit of a negative equity situation because they can't hold on to their house, like trying to, you know, rent the house out and keep that rate instead of selling it and trying to make that work. So very, very minimal. The number of US homeowners in negative equity dropped to its lowest level in over 12 years. Okay, again, 2008, 2023, height of the great financial crisis. Now, I don't know if this was 2008. It was the height. 16 million people in negative equity situations. 16 million people. That is crazy. 344,000 today. Why did that happen? Because people were getting loans for houses that they weren't qualified to make. You could do stated income loans. I make this much money, sign it. People weren't checking it. Like, underwriting was crazy. That's why now it's so hard to get a mortgage. Like, they put all these, you know, all this red tape and procedures in place that doesn't happen again. But people were qualifying for mortgages that weren't qualified, that had no business getting a house at that payment. They did the adjustable rate, so it was affordable for a little bit, but then it was going up and going up. And so, but then also, you know, houses were gaining value because people were buying because it was so easy to buy. So that is just a totally different situation than now. People have bought their houses because they want to be at home. They want to have a home. Home is important. Yes, we have investors that are buying houses, and trust me, buying real estate is a freaking awesome investment. If you've watched any of my videos, you probably heard me say this, but I heard Dave Ramsey talking, and he said, buy a house for your kid. You know, buy each kid a house. Okay, that sounds crazy at first, but when you think about it, okay, what's the down payment on that? You know, as opposed to like doing a college savings plan, you put a down payment on a house and you rent it out, and someone else is paying that mortgage and building that equity. So then when it's time, you know, you have that house for, you know, 18 years, time for kids to go to college, you have all that equity, you know, you can pull that out you could sell it if you wanted to, but you have that income where you can pay for their college. And you didn't even, you know, you put that initial money down, but you didn't even put money in basically after that. I mean, of course, there are costs, but there's tax savings costs too. I mean, tax savings also. I'm not an accountant, so look that up. But I think it's a great idea. So that's what I want to leave you with. The vast difference of negative equity, of people in forbearance, of people in delinquencies, not to mention, I'm not even going over the market and, you know, that we're still in a seller's market, that we have an undersupply of inventory. This is just looking at data to show that it makes no sense that a foreclosure crisis is coming. Are you wondering what is going to happen with the housing market in the last part of 2023? Have you been reading headlines? Have you been, you know, even seeing YouTube videos of people predicting the market's going to crash? Most likely, yes, because I've been seeing those same headlines, and actually I haven't watched a lot of the videos, but I'm hearing the rhetoric. I'm hearing what it is. So I want to take you, we just got her. They found her outside my husband's school, and she was hungry and wet, and so we've had her for like a week. And so I want to show you, like, when you look at the data, when you look at graphs, when you look at, you know, when you analyze the data in the actual articles, it really does make a difference. Talk about several things. I love you, baby. So I am going to jump on and share my screen, and we will start now.